What is going on, everybody? It's Mr. Banks here, and I'm coming at you live with a nice trade recap to show you how we caught the very tippy top on SPY today and what I was looking at so you guys can become successful, sufficient traders on your own and make trades like this. But go ahead first and like and subscribe so you don't miss any of the educational content that we put out on a daily basis. So we caught the tippy top today here on SPY. I gave the game plan to the team before, right? Break and hold 404.30 or reject for puts today, right here in bold. And then as you guys can see, I went ahead and made the call today, one of many calls. Boom, boom, boom. Let me find it real quick. SPY 403 puts, 0 DTE. And these ran over 100% today. And the team absolutely banked. So I got to give a big shout out to everybody in the team. Absolutely demolishing today. I mean, 966, 209, 1400, 839. Someone made $10,000 with my guidance saying that we should not be taking puts yesterday. Why? Let me show you. Let's get into it. So yesterday, retail wanted to get short. Why do they want to get short? Well, let's take a step back and look at the bigger picture. As you guys know, you always need to take a step back and look left. Look at the bigger picture. That's going to show you really what's going on. Don't get so focused on what's on the smaller time frames, right? Zoom out, look left. Let's take a look at why I told the team not to go short yesterday. Well, first, we could see this nice supply turning into demand. So this zone, as we could see right here, there was a lot of demand slash supply, right? Every time we were in this, we kind of sold off and we came back, we bounced up, sold off, sold off, sold off. So when we're looking at supply and demand, we want to see these zones where there's a nice balance between buyers and sellers. And then we see a big move out of this zone. So that's how you could tell it's a supply or demand zone, right? We see a nice balance between buyers or sellers, and then we see a big move out of the zone. And that's how we find these zones. So yesterday, we kept selling off in the zone. We came back and we gapped up out of it yesterday. So I told the team, especially if you guys are on Twitter, social media, I'm sure everybody was screaming, go short, 402.50, go short. Well, guys, if we are gapping up and breaking out of this demand zone, you guys see this, right? We came up, we keep selling off, selling off, selling off, selling off. And then we come back yesterday and we gap up and break out of it. Why would you want to go short there? That just makes zero sense to me, right? See this demand. We gapped up yesterday out of it. So why would you go short if we gapped up out of this major supply zone, now showing you that this is a major demand zone? So that was clue number one as to why not to take puts yesterday. Another one was I waited for today to take a trade. I didn't swing anything because one, we had jobless claims, and two, we had GDP. And where we closed yesterday was in the middle. Now, don't diddle in the middle or you'll get the fiddle. We were in between these two big zones. So we had this zone here. And now if we take a look at this supply up here, right? Look at this big demand turn into a massive supply zone, right? So if we're diddling in the middle and closed in the middle yesterday, right, the best thing to do is to wait until today to see if we get a nice sell-off once we reach into the supply zone. And guys, we could see not only is this a major, major supply zone, but what was it? It was a big support and resistance flip. So as we could see right here where I made this line in bold at the beginning of the zone, right? Major bounce off, major bounce off. So you could see that this 404.30 level was a really big level. I mean, it's showing you that this is a absolute massive level. And then, so I'm on the 1 hour time frame here. It's where I like to zoom out right? And look at my trades for the week. You could also look on the daily, but I prefer the 1 hour when we're looking at these supply and demand zones for us to take trades. So we saw this 404.30 level, right? Massive, massive support and demand here. I mean, every time we were coming back, we shot up, right? And then we started selling off. Right here, you could see, when was this? March 7th, right? We came down and then we retested and failed it. And that's where we created this recent low, right? So you have to expect that with this support, massive support entering into this demand slash supply zone, right? That since it was demand and it showed that it turned into supply, the last time we were in this major zone and at this major level, you have to think the next time we enter in here, there's still going to be some sell orders up here. And that is exactly what happened today. That is how I found my 404.30 level. And that is how we took puts today. So when we came up and gapped up again today, we touched this level and sold off to AT, and now we're back again. But guys, when you see major levels like this, you have to think, okay, if we sold off to create this massive low, I mean, we last time we were up here, we ran all the way down to 380. That's a 24-point move. That's a massive move out of the zone. So you got to expect the next time that we get up into the zone, we're more than likely going to see a nice reject and pullback, right? So again, massive support, as you guys can see right here. Massive, massive demand turn into a massive supply. So the next time we're going to reach this level, you got to think we're probably most likely going to reject it, since it's showing we had a 24-point move out of this supply zone. And that is how I found my 404.30 level. Now let's go down a little bit to the smaller time frames. As you guys know, if you watch my videos, I take my entries on the 2-minute time frame. And I do have the BBR strategy where we use EMAs, but today was purely price action, supply and demand. That's all it was. 0 lines on my chart. I mean, obviously a line at 404.30, but other than that, it was simply price action at supply and demand. Trading now for 10 years, this is something that everybody should be aware of. Now, when we came back up, right, we kind of held this nice support here. When we came back up, when this was trading live, we saw a massive bounce up, and then it was a quick bounce up out of the pre-market high, and then we quickly sold off. We bounced up and had a nice wick down almost instantly. I mean, look, it's the same candle that we wicked up on this 2-minute. Let's take a look at the 1-minute for confirmation. Now, I don't really use the 1-minute, but this is just to show you, look, we're on the 1-minute. So this candle, right, this move that happened to break the pre-market high got sold off in that same candle in the 1-minute candle. That means in 1 minute, we had that massive bounce up to break the pre-market high. And as we know, this was entering into that supply zone that I was just talking about, that 404.30. Look, 404.30, we wicked at 404.34. In 1 minute, we wicked up and wicked down, showing that sellers are heavily prominent at this level. Heavily prominent at this level. I mean, essentially, this is a shooting star here, and then we sold off. So, guys, you see this big old wick here even on the 1-minute time frame, just to show you as an example. Within 1 minute, we jumped up and super wicked down, right? It's showing you that the sellers are there. They are super heavy, like we saw in this major supply zone here, right? That we had drawn, right? Sellers are present. If on the 1-minute time frame in a 1-minute wick, if we jump up into the supply and sell off like that, that's showing you that sellers are heavily present. And as you guys can see, this is where we went ahead and took this call, right? About 30 minutes into the market is where we took this call. We caught the absolute tippy top on this level, right? So boom, took the trade right here, sold all the way off. And then one thing you guys need to do is hold your runners. And one thing you need to do is stop using percent stop losses. I understand that's being taught a lot. I understand it's supposed to help new traders, but when you start to get more advanced and you start to trading more, you need to use size where you don't just sell because you're down 10% or down 20%. What professional traders do, what I do, is we need to see a break of a big level. So if we never broke pre-market high, we entered in the trade here. We obviously sold some here over 70%. And then I held my runners. I held my runners literally all day until we hit over 100% down here, right? So why did I hold my runners? Well, we literally bought up here. Now I'm going to wait to see if we break the high of the day. If we don't break the high of the day, then chances are we're probably going to keep heading lower. And with this, we put in a lower high and didn't even break pre-market high. So guys, start to use levels as your time to cut a trade versus percentages to cut a trade. It will help you out tremendously. I don't know how many times when I started first trading or see you guys, right, when you trade, oh, I hit my stop loss and then ran in my direction. Hit my stop loss, ran in my direction. Lost money I should have held because it ran in my direction, right? So what is happening? Well, it's coming back to a certain level and it's not breaking it, finding it as either, resistance to reject again or support to bounce again. And now it's running in your way, right? It's running in the direction that you took the trade in. But since you had a silly percent stop loss on the trade, you keep getting kicked out of your trade. Guys, if we don't break certain levels, that is when you should cut, right? You should be looking at levels to cut, not percentages to cut. You understand that, right? So we held on this all the way, right? Sold here, held runners all the way until the end of the day. Not the end of the day, but until the end of this run. And we banked on it over 100%. As you see, the team ate. Guys, if you don't follow already, follow me on Twitter, Real JG Banks. Only one with the check mark. I mean, $4,100 on the day. Absolutely smashed it, right? This wasn't the only trade we took. We took Amazon for over 100%. We took Baba today, right? Three trades or less a day. That's all you need. So hope you guys really understand, right, where supply and demand. I hope you guys learned a lot on this video. I'll go back one more time, right? How do we find these levels? Well, I like to use the 1 hour. And looking at the 1 hour, you could see this 404.30 level was absolutely massive. I mean, it showed massive support and the beginning of this nice supply zone, right? And when we came back up, nice reject and where we took today. So we had our level. We had that this was a massive supply zone. And then I'm trading on the 2-minute. We see this massive wick up in one candle, reject that level, that 404.30 level, reject that level and that zone, showing sellers are heavily prevalent. And then we took the trade down. Sold down the runners here and held because we did not break pre-market high and we did not break the high of the day. We held our runners and then we ended up banking over 100% on the runners today. Guys, know your levels, know supply and demand. Really, you could keep it that simple most of the times. Hope you guys enjoyed this. Shout out to the team for absolutely banking today again. Go ahead, hit that like and subscribe button. I will see you guys next time. Hope you enjoyed this video. Hope you guys learned a lot on this video. Comment below if you learned about supply and demand or anything that you learned today to help better your trading. I make these videos for you guys because I want to see everybody win. I want to see everyone become a self-sufficient trader. And guys, I give you the keys to the game. 10 years, giving you guys this stuff for free. So hope you guys enjoyed. Don't do anything stupid. Friday is tomorrow. Size down, risk light. I will see you guys another time. Have a good one.